Okay, let's get right to it. The crypto market is under siege. Seriously, it is on a razor's edge right now, and we're seeing a massive market-wide crisis to kick off the week. What's going on? Well, over the past 48 hours, a perfect storm has hit a huge sell-off thanks to new government tariffs, old fears about a China crypto gan coming back with a vengeance, and one of the biggest institutional outflows we've seen all year. So, yeah, this is your essential briefing. And look, the stakes here, they couldn't be higher. This is not just some bumpy week in crypto. One analyst put it perfectly. This could genuinely be a defining moment for the rest of 2025. So let's break down what's really happening piece by piece. All right. Our top story, it's all about Macro Mayhem. We've got 3 huge global events all high-setting at once, creating this perfect storm. And you better believe it's hitting crypto and hitting it hard. So what's the first domino to fall? Well, it's a big one. The announcement of these new reciprocal tariffs just sent the entire market into a tailspin. And this isn't just some political headline you can ignore. No, this is pushing crypto deep into what traders call a risk-off environment. And what does that mean? It's simple, really. It means investors are running scared. They're dumping anything they see as risky. And that includes crypto. And they're flying to what they think is safe, like cash. And the impact, it was immediate. It was brutal. Bitcoin just smashed right through its crucial support level of $115,000, hitting a 3-week low. Ouch. And it wasn't just Bitcoin taking a hit. Oh no, Ethereum and Solana, they followed right behind, tumbling a painful 5 to 10%. It just goes to show you how jumpy the market is right now to these big global shocks. And that initial drop, it triggered absolute carnage in the derivatives market. We're talking hundreds of millions of dollars in what are called leveraged longs. That's basically traders borrowing money to make huge bets. The prices are going to go up. Well, they got completely wiped out, liquidated. And this flood of liquidations, it just poured gasoline on the fire, making the sell-off even faster. Now, everyone is looking at August 7th. That's when these tariffs are supposed to take effect. It's going to be a huge moment of truth for the entire market. And hey, as if that wasn't enough drama for 1 week, right? Well, a ghost from crypto's past just decided to show up. We've got reports swirling around that China is at it again, apparently escalating its war on crypto with a complete ban on trading that supposedly kicked in on August 3rd. You can just imagine this is dumping a massive pile of food. That's fear, uncertainty, and doubt onto a market that's already in a full-blown panic. Okay, so how are we supposed to read this whole China situation in the short term? It's just pure pain. It's all about that FUD we just talked about and real worries about, what this does to global liquidity. But there's another way to look at it. Some analysts are pointing to a potential silver lining in the long run. Think about it. A final definitive ban from China could actually lead a fire under U.S. regulators to get their act together. And just like we saw with the mining ban back in 2021, it could end up making the whole network even more decentralized as activity gets pushed out to the rest of the world. Kind of ironic, right? In all this chaos. It brings us to the big question. What is the big money doing? The institutions, well, get this, in just 1 week, over 800 million was yanked out of Bitcoin ETFs. If you want a perfect picture of that risk-off mood, that's it right there. This is the second worst week of outflows for the entire year. That is a staggering amount of money heading for the exits. And it was a total bloodbath across the board. I mean, you've got the big players, Fidelity, ARK Invest. They saw huge redemptions. Even BlackRock's EBIT, the titan of the ETF space, saw money flowing out. And don't think Ethereum got away. You unscathed its ETFs, saw over 150 million in outflows, completely snapping a 20-day winning streak of money coming in. It's a crystal clear signal, folks. The institutions are slamming on the brakes hard. So, okay, the market is teetering on the edge. The critical question on everyone's mind is what happens now? Let's dig into the key events and trends you absolutely need to be watching. Okay, get your calendars out because August is basically a minefield of volatility. You've got to have these dates on your radar. First up, August 7th, that's D-Day for the tariffs. The big one then on the 13th and 14th, we get hit with major inflation data, the CPI and PPI reports, and the grand finale, the Jackson Hole Symposium from the 21st to the 23rd. That's where all the big central bankers get together and hint at what they're going to do next. Every single one of these dates could send the market flying now in the middle of all this chaos. Something really interesting is happening, is what we call a flight to quality. Take a look at Coinbase. On one hand, they're cleaning house, delisting smaller, maybe riskier tokens like Function X on August 15th. But on the other hand, a major established player like XRP, the one they relisted back in 2023. It now makes up 13% of their second quarter revenue. That's more than Ethereum, which came in at 12% wild, right? It's a huge clue that in times of fear, the market tends to huddle around the bigger, more established names. But even with all this doom and gloom, the bulls are not throwing in the towel. Not yet. The technical analysts, the chart watchers, they're drawing a line in the E-sand for them. The magic number is 114,000. That's the critical support level. Their whole take is if Bitcoin can just hold that line, a powerful rebound back to 133,000 is still very much on the table for August. It's a nail biter for sure, a classic high risk, high reward setup. But it shows you that a massive reversal could still be in the card. Okay, let's switch gears and dive into the Wild West, the altcoin arena, and the whale watch. So with the big institutions sitting on the sidelines, where's the really risky money, the smart money, some would say? Where is it actually going right now? Well, a few really high-risk plays are starting to pop up first. You've got the whales, the huge holders, and we're seeing them rotate into brand new pre-sales like blockchain FX. Then you have retail traders, and they're chasing the hype around other pre-sale surges like BlockDeck. Of course, the influencers are out in full force already yelling about a coming alt season with 100x potential. And then there's the really Dajin play meme coins like Bonk and Pepe being pitched as a way to play against the trend and catch a quick violent bounce. And this kind of deep market uncertainty, it always leads to some pretty unconventional places. You're not going to believe this, but we are genuinely seeing a rise in a bizarre little subculture, traders turning to crypto horoscopes for an edge now. Before you laugh, let's be clear. There is zero scientific basis for this, none, but it kind of acts as a weird sentiment tool for a certain slice of the retail market. And here's the crazy part. The theory is that if enough people believe in these predictions and actually trade on them, it can become a self-fulfilling prophecy, at least for a little while. It's a really fascinating glimpse into the market psychology when things get this chaotic. Okay, let's pull the camera back. Let's take the long view and look beyond just today's panic. How in the world do we square the intense fear we're feeling right now with the super bullish ideas that have been driving the market all year? This right here, this is the core conflict. This is the battle for the soul of the market right now. In one corner, you've got the bears. Their fuel is pure macro fear tariffs, the China ban rumors, a rising US dollar. And in the other corner, you have the bulls. They're pointing to the whales who are buying this dip. They're pointing to the incredible ETF flows we had before this week's panic. And they're pointing to strong fundamentals from Q2. It is a classic tug of war. And right now, nobody knows who's going to win. And just when you think the fear might win out, listen to this. This is the powerful counter argument to all the panic Bitwise. And these guys are a major, highly respected crypto asset manager. They are sticking to their guns. They're still saying that Bitcoin could potentially break $200,000 this year. For a big institutional player to say that right now, it tells you the long-term bull case is very, very far from dead. All right, let's boil this all down. What do you absolutely need to remember? Here are your key takeaways. Number one, crippling macro pressure. The tariffs and the strong dollar are the immediate enemy. Number two, the institutions are de-risking the ETF. Outflows prove the big money's on the sidelines for now. Number three, the bulls aren't dead. Whales are buying, and the long-term predictions are still sky high. And four, the most important one, all eyes on August 7th. That is the date. That's the next big firework. And hey, one last really crucial thing. Please remember this explainer is just for educational and informational purposes. It is absolutely not financial advice. The crypto market is, as you can see, incredibly volatile. So you always have to do your own research and never, ever invest more than you're willing to lose. So all of this leaves us with one final massive question. Is this a market crash that we should all be afraid of? Or is this the exact kind of chaos that creates a once in a generation millionaire making opportunity, the chance to buy when there's blood in the streets? How you answer that question? Well, that's